Thanks very much for the opportunity to join you this morning. As Scott outlined, I look after the work of the private equity and venture capital industry body here in Australia. Goes by the name of AVCAL, and effectively our role sort of comes down to three core areas of focus. The first of which is to engage with policymakers, governments, administrators and regulators to both identify and then hopefully resolve and do something about the issues that get in the way of private equity and venture capital firms being able to do what they do best, and that is invest money into high growth Australian businesses. The second part of what we do is to engage with the institutional investor segment, and it surprises a few people to hear this, but amongst our membership, a very significant portion of our members, around about a third, in fact, of the 200 or so members that we have at AVCAL are superannuation funds and pension funds. So they are very interested in this space, private equity and venture capital. I'll talk a little bit more in a couple of minutes about the involvement of institutional investors in the venture capital segment especially, but we spend a lot of time talking to, engaging with those insto investors, because at the end of the day, anything that helps improve the pipeline of capital flowing into private equity and venture is good for the economy. And the third part of what we do is around ensuring that our industry does everything it needs to from a compliance point of view and a training and development perspective. So what I was planning to do this morning is really just run through, and there's a lot of slides here, and I'm going to run through some of the slides very quickly because we don't have a huge amount of time for this part of the program, but you will have access to the slides after this morning, and certainly I'm very happy to field any questions or remarks that any of you might have after this morning. But what I was going to do was just outline for you a little bit about where the industry is at the moment. I always start by talking about some of those brand names out there in the market, and for many people they may or may not recognise that some of those brand names have in fact been backed by venture capital or private equity, or both in some cases, over a number of years. So some fantastic Australian businesses, and if we put them all up we'd be here all day, but that's really just an overview of the landscape. Focusing a little on venture capital, the number of managers here in Australia is around about 27 at the moment. Moves up and down almost on a daily basis, depending on who you talk to and which part of the market you're in. But for our purposes, there's around about 27 managers. They've invested in around about 207 portfolio companies, as we think of them. And the total investment for just financial year 15 was about $224 million, which is a sizable amount of money, but I think there's plenty of scope to invest significantly more capital than that. On the right-hand side of that slide are just some of the names that I'm sure many of you will have come across in your travels so far, the likes of Blackbird, Blue Sky, just up the road at Brisbane, and Brandon, GBS Ventures, Moelis, One Ventures, and some others. Same sort of data set for private equity, and bear in mind that this is growth private equity. So we define growth private equity as really investments anywhere from around about $50 million in enterprise value up to sort of $300-400 million in enterprise value. So in that sort of segment, we've got about 43 active managers, 280 odd companies, and for the last financial year, about $460 odd million invested. The third of the segments, which I haven't got a chart on because it's not so relevant to the discussion today, perhaps, is buyout private equity. So they are the larger private equity funds, the likes of Quadrant Private Equity, Pacific Equity Partners, TPG Capital, the offshore funds, KKR, and a handful of others. And obviously the metrics for them would be significantly different. They're investing bigger amounts of capital, mostly into listed companies. The PE and VC investment model, which a lot of you will be very familiar with, so I won't spend a lot of time there. And again, this chart is really just to serve the purpose of explaining the inner workings, if you like, of the life cycle of a VC or PE fund. They tend to be very similar in structure. The investors we refer to as limited partners because of the legal standing that they have, as opposed to the fund managers, the general partners. and they obviously go to market, they raise a fund and they deploy that capital into usually a portfolio of investments over a number of years. Those funds tend to be closed-end funds that run for anywhere from 10 to 12 years in most cases. The J-curve, probably similar to the sort of experience that some of you guys in this room most likely have with investing at all ends of the spectrum. No rocket science here really. This is just to depict the flow of cash and capital over the life cycle of a fund. This chart's sort of interesting, a little bit messy, but I'll quickly, No, I've broken it. There it is. Okay, thank you. So this just shows you the composition. A couple of the bits down the bottom aren't showing up the way they should, but most of the capital going into VC is sourced from Australia. Contrast that with private equity or growth private equity, where most of the capital going into private equity is split between Australia, US and other, which tends to be a little bit of a hybrid of the Middle East and a few different pockets around the UAE. So you can see that the flow of capital here in Australia is going in different directions for a few different reasons, and happy to talk about that in the Q&A perhaps later. Majority of private equity deals, which I might quickly gloss over, and this is a breakdown of the sort of sectors that private equity is investing into. As I said, you'll get all these charts so you can have a look at the detail for yourself afterwards. VC investments, this shows you where, again, most of the capital is flowing from venture capital, and it tends to be broken down into two core segments, life sciences and ICT or digital, not surprisingly, and a small amount of money going into clean tech and energy. So there's definitely a big focus in Australian VC on either life sciences or ICT. I won't spend too much time on this. This is, again, explaining a little bit of the investment strategy on the part of private equity and venture. What do they do once they invest into a business? Could be a grab bag of any combination of those types of different strategies. The amount of VC money going into a sector like healthcare is really interesting to break down and look at. Because you can see how that translates into and how it compares against the listed market. What is the difference with businesses backed by venture capital and their capacity to generate revenue growth as opposed to businesses that might already be listed through a backdoor listing or some other channel on the market, and how do they go about generating revenue growth? And you can see some of the data on the chart on the right hand side gives you a pretty good feel for that when you start talking about companies like ResMed and Cogstate, MPMed, etc. This is a little bit of marketing for the industry, which I won't spend too much time on, but the performance of both private equity and venture capital compared to the ASX market is exceptionally strong. That's the point, and the data here tells you a bit more of the detail behind that. There is a really, really good pipeline of deal activity here in Australia, and I'll just share with you a very quick anecdote around this. When the government last year was introducing some changes to the significant investor visa program, which some of you may have heard about or been involved in. This is basically the visa program that allows wealthy individuals from offshore to migrate to Australia if they invest a minimum of $5 billion into this country. The minister at the time was Andrew Robb, the Minister for Trade, and he spoke with us. We'd been agitating for a change to the structure of the SIV program for some time because we saw that the downstream impact of the existing SIV program was that a lot of that capital, those $5 million licks of capital, was simply ending up in residential property, which wasn't particularly helpful from an economic point of view. And it wasn't really helping to correct some of the market failure that exists here in Australia insofar as venture capital money being able to find a home into high growth businesses. So Andrew at the time said, okay, well, I'm interested in the proposal. What I need to understand though is if there is a big wall of capital that comes in through this SIV program, will it find a home? Will there be enough absorptive capacity in the market for those chunks of $5 million or portions of the $5 million chunks to be able to be invested into investable opportunities out there in the market? We said yes. We presented him with lots of data and he still wasn't 100% satisfied, so we said to him, look, we'll go around and talk to all of our venture managers. There aren't that many, as we said earlier, 20 odd managers, so it wasn't too hard. And we'll find out for any given period of time, whether it's a month, 6 months or a year, how many businesses do they see come through their door that are genuinely investable businesses that they would back were they to have sufficient capital to do that. And so we did that, and it didn't take too long before we started to hear the same consistent message across the whole industry. And that is that on average, most venture managers in Australia would see about 200 good quality deals every year. They would filter the 200 down to around about 10 to 12 genuinely investable opportunities that if they had a bucketless supply of, or an endless supply of money in the bucket, they would back. The reality, of course, is they don't have an endless supply of capital. They have a limited supply of capital. So the next question became, okay, so of those 10 or 12, how many do you actually fund in a given year? And the answer was around about 2. So numbers 3 through to 10 or 12, great businesses, genuinely investable, should be invested in and backed here in Australia, but miss out simply because they're number 3, 4, 5 or 10. And so that demonstrated very clearly when we presented all of that data back to the government that the investable opportunity set was especially strong. And this was, bear in mind, this is well before the change in leadership in Canberra as well. So I could probably guess that the investable opportunity set is improving day by day. Some of the large players in the industry, again, you guys will be very familiar with these names, the likes of Atlassian, Campaign Monitor, Nitro, Seek, of course, Oz4X, REA Group, all of those guys have found support from venture capital over the years here in Australia. This talks to that point I was just making, I guess, which is around the investable opportunity set. This is a little bit more focused on private equity, this chart, but what this one tells us is that around about a population of more than 20,000 Australian businesses in that $10 to $200 million range need support from a source of capital, a provider of capital like private equity. And at the moment, as you might remember from one of the earlier charts in the slide deck, the number of businesses actually backed by private equity at the moment here in Australia in the growth segment is, I think, around about 400 or 500. So you talk about opportunity, and the opportunity is there in spades. I'll gloss over that. Now I'll just spend a minute or so before we move into the panel discussion, just outlining at a very high level some of the components of the National Innovation and Science Agenda that Malcolm Turnbull and Christopher Pyne announced in December. So it's actually a very comprehensive program. I know the media tended to focus on only a handful of key issues around tax incentives and a couple of other bits and pieces, but when you actually look at the entire agenda that was announced, it's actually very broad, and I've summarised all of those down to those 15 or so points on this chart. There were, of course, the tax incentives. There was some discussion about improving the R&D program, which is so important to the early stage ecosystem for startups. Improving access to company losses, which is, again, another tax change, but really important because what that recognises is that businesses that pivot away from one area of focus into another area of focus in the market, at the moment, they have constraints around how they can utilise any losses that they might have generated when they were engaged in their old business, if you like, and those losses aren't available to them when they're involved in their new business. And so the government said, we recognise that, we're going to make some changes to the tax law to allow for that, which is great for businesses that need to adapt and change in the current market. Changes also around being able to write off IP and intangibles. There's a new CSIRO Innovation Fund worth $200 million odd. The CEO of the CSIRO now is a former venture capital manager here in Australia. His name's Larry Marshall. Used to be a VC manager at Southern Cross Ventures. So it doesn't surprise me at all to see a $200 million CSIRO Innovation Fund under Larry. $250 million Biotech Translation Fund. Incubator support program worth $8 million, changes to insolvency and bankruptcy laws. Again, a really important piece of the jigsaw, which helps improve our capacity to manage that cultural barrier that exists here in Australia around failure and fear of failure. Proposal to introduce a new entrepreneurship visa, which is to attract talent from offshore. Further reforms, I should say, to the employee share scheme and share ownership plan framework. Changes to research block funding for research and universities, establishing new startup landing pads in a few different locations around the world, and I think 2 of them have been set up already, one in San Francisco and one in Asia, and new governance arrangements around the innovation system, policy architecture, which is being led now by Bill Ferris, again, a very well recognised and well regarded member of the venture and private equity industry here in Australia, and widely credited, in fact, as being one of the fathers of the industry here in Australia when venture capital preceded private equity, in fact, here in Oz. So that's a very quick run through of a whole bunch of things, and apologies again for having to gloss over some of the bits of detail, but it's all in the slide deck which you'll get, and as I said, very happy to field some questions now in the Q&A as part of the panel about that or anything else, and also afterwards, if you unpack any of the detail in the slides and you want to get your head around a particular issue, I'm very happy to explore that. So, over to you.
Thank you. Please thank me. Yasser's going to join the panel at the front table here. If I'll introduce you to our other panel members today. The panel discussion is entitled Investment and Innovation Incentives. It's going to be chaired by Linda Woods. So if I can ask the panel members please to make their way to the table while I introduce you. Our second panel member is Aaron Birkby. Aaron is the entrepreneur in residence for the River City Labs Accelerator in Brisbane. He is co-founder and CEO of Silicon Lakes, a not-for-profit startup group operating for many years on the Gold Coast here. He is also the founder and CTO of Coded Intelligence, which provides custom technology solution designs. He was manager of commercialisation for the Queensland Department of Science, Information Technology and Innovation. Aaron also founded and was the CEO of Arida Internet, where he developed digital advertising solutions and self-serve kiosk solutions. He sold the company in 2012 at a point where the company had over 200 clients, with 2,000 installations in 8 countries, generating around $6 million in annual end-user revenues for clients. Aaron has had 14 businesses since the age of 16 and has a Bachelor of Science and a Bachelor of Law. Please welcome Aaron to the panel. Our final panel member is Scott Cross. Scott is a director of Altor Capital and responsible for originating and distribution of investments and capital for Altor and its clients. Scott has over 15 years' experience in investment, public company and startup sectors. Scott was successful in founding disruptive payment startup OneTab, and as managing director was fundamental in the growth of the business for over 3 years before successfully selling it to an ASX 100 company. Prior to OneTab, Scott was the Queensland State Manager for a listed resources company with significant coal assets throughout the country. Scott was fundamental in the funding of the company and commercialisation and sale of the assets. Scott was also Senior Manager at Macquarie Specialist Investments with Macquarie Bank, where he was responsible for the Queensland market. Please welcome Scott to the panel. And finally, our chair for the panel discussion, Linda Woods, who is Private Clients Investment Advisor at RBS Morgans. Please welcome Linda. Morgans.
Thank you. Wow, what a great way to start the year. I would just like to actually ask one very quick question first, and I think you're sharing one microphone, so you probably need to check that's on and pass it along. Thanks, Scott. Can I start with Aaron? Can you please explain to me what's an entrepreneur in residence? What do you do?
Entrepreneur in residence. So basically a program manager for a startup accelerator program. So holding startup founders accountable, designing the program around them to find the expertise, the mentors and that sort of thing.
Mm-hmm. Sounds like fun.
It is.
Okay, so basically what we've got is a large injection of capital going into various programs supported by the federal government. And I was talking to Yasser earlier and said that from my experience, most Prime Ministers come into government with a personal agenda, and Yasser was explaining that it's been quite rapid, the changes that have happened down in Canberra. I think it's quite clear that our current Prime Minister is all about innovation and change and trying to get everybody in this room, if you haven't already done so, to take a little bit of risk and risk into investment. And I was very pleased to bump into someone over catching a cup of tea. And this is something that is a great example of change that I have never seen before. I've been supporting different forums across the Gold Coast, Brisbane, Sydney and Melbourne for decades. And yes, I'm that old. And I've never bumped into a principal of a high school at one of these sorts of forums. And he is here from Helensvale because their school has introduced a new program of entrepreneurship, and I think we should congratulate the principal of Helensvale High School. So thank you. Now that's a direct reflection of what's happening at a much higher macro level, but it's also filtering right down to everyone, and I see it every day at work. I'm getting phone calls from people wanting to invest into companies on the stock exchange. So clearly everyone wants to be an angel investor. So what are we seeing right at the moment? We've had all these new changes. 1.1 billion is going to be injected into this area for the next 4 years. Perhaps we should start with Aaron and work our way through the panel. What are you seeing? What's been the dramatic changes that you're seeing right now? And then what do you think we'll be seeing in 4 years' time?
So right now I'm seeing all levels of government, from local, state and Commonwealth, all singing from the same songbook, which is great. We've been screaming about this sector for a long time, and the language has changed, which is fantastic. What I'm seeing right now, because of that, because startups, innovation, they're sexy terms. So now what we're seeing is this influx of corporates playing in the space, consultants playing in this space. And where I get a little bit scared right now is there's a big focus on the supply side. So we're going to have this influx of programs, accelerators, new VC funds or new micro funds. I'm a little bit worried that we don't have the technical capacity, like the actual experienced entrepreneurs, to deliver those programs, and that they're going to end up delivered by people who actually could do more harm than good. I also think that we're very focused at that top end of the funnel, at least in the sector I'm in. There's a lot of focus on what we call the entrepreneur side of that pipeline of funnel of growth. And I think we need a bit more focus on a slightly later stage, so particularly programs for startups that might already have an existing product, some initial customers, some initial revenue, but actually helping those startups out. I think that's the gap in the market. So projecting 4 years, I could see it going either way. I absolutely think it's going to have a positive impact. I'm just a little bit nervous that we might actually do a bit of harm with poor quality programs, or programs that are run by the wrong people that actually produce negative returns in terms of startup outcomes at investment, and actually could potentially damage the sector.
Yeah. Yasser?
Well, I think I'm going to echo a lot of Aaron's observations there. I think there is a risk insofar as all of the focus on startups and entrepreneurship is concerned. If there is I'm not normally the glass half empty guy in the room, by the way, but I do find myself sometimes in a discussion around these topics being that person, because there's a lot of interest, and it is sexy and it's cool and it's exciting, and the media loves it. Governments and politicians love it, clearly, but it is important that we maintain a bit of a level head, and importantly, we understand exactly which parts of the continuum, the life cycle of funding, are we trying to address and correct. And I don't mind sharing with all of you that if there is one frustration I've had with the federal government in the last 6 months or so, it's been that I'm not entirely convinced that they have fully understood yet not for want of people like me and others banging the table and explaining it, mind you, but I still think that they've got some while to go to understand the difference between startups, entrepreneurship, innovation as a broad thematic, and where we need to do a better job here in Australia insofar as our capacity to fund those businesses, as Aaron said, that have a bit of a track record building, have revenue, have clients, have a base to work with, and being able to inject capital at the slightly later stage of the spectrum. So it's not to say that we shouldn't be doing everything possible to encourage entrepreneurship, to seed a change in culture, but we still need to tackle what I sort of think of as the thin part of the funnel. If we've got a lot of great ideas, a lot of great entrepreneurs going in at the top, and some of those will filter down into genuinely investable, high-quality entrepreneurs and businesses, then we need to make sure that the thin part of that funnel gradually expands. Again, another data point I didn't include in the pack up there, but last year in Australia there was around about $380 million in new venture capital money raised, and only $110 million of that capital was targeted at later stage venture investing, which I think is a real problem. I think the balance should be the other way around, because it's, and this is an argument that I put to some of my former colleagues at the Treasury Department time and time again over the past 6 months, and that is that when you're funding businesses at that point in time, that's the point at which they're scaling up. Right, that's the point in time at which they're employing people, they're leasing offices, they're buying equipment, they're really making a significant economic contribution. So in actual fact, if you were to just look at this based on numbers and economic metrics, they're the ones that you probably need to be focused on, because they're the ones that are going to be generating some sort of payoff from an economic viewpoint. You can't be as black and white about it as that, of course, but I think the balance we have at the moment is not quite right, and I think there's still a journey to go on that, and it's something we spend a lot of time at AVCAL talking about with the government.
And from your perspective, Scott?
Yeah, in terms of echoing some of the things you guys have already mentioned, for us, yes, I think it's great that the government's coming out with all these incentives, if nothing else but to get the conversation on the agenda. People have very short memories. Only think about 2.5, 3 years ago, if you said, I've got a disruptive tech company, would you like to fund it? And I said, so, but where's the coal? So people have really short memories. I think it's fantastic that we're in this mindset, and there's a lot of people sitting here listening to this conversation across the country, and that there is a real opportunity, especially here in Australia. I personally think Australia's front and centre in terms of the knowledge and the skill set in the fintech sector. The Australian banking system is miles ahead of everywhere else around the world. On the flip side of that, I wanted to say that I think it's great there's a lot of money potentially coming to the startup community. On the flip side, I think it's responsible for firms to not just invest in companies purely for a sort of financial incentive. If it's purely for a tax deduction or a rebate in tax or whatever it might be, if you're investing in a company fundamentally to get a handout from the government, I don't think you've done your due diligence correct. I think we still, echoing what these guys are saying, the company should be able to stand on its own 2 feet and should be scalable, and it should be able to employ and ramp up and hopefully be disruptive globally. Having a government incentive and money available, in our opinion, is sugar on top, and hopefully within 4 years, this money and these programs that the government have brought out has allowed the industry not only to grow significantly, but to stand on its own 2 feet and really be a sort of economic juggernaut of what we've seen from the last 10 years in the resources sector.
It's a really valid point. I think, Yasser, you were mentioning before, there's over 200 companies that go into startup phase. If you're looking at from an investment case, you narrow it down to about 20, and then of that, you've got about 10 that make the short list, only a couple get funded. You did make a point that between number 3 and number 10 are probably going to be okay. They need a bit of support. Some of these programs will pick up on that, or venture capital companies will. But there's another 180 plus that might have got there had they been given the right support. Is this program trying to target some of those companies rather than what we will all capture at the other end of the scale?
Yeah, I think it is. The short answer is absolutely. There's a preparedness to do everything possible to ensure that the ecosystem thrives in a broader sense, and that does mean ensuring that you've got the right talent around the table. And I think Aaron made this point again a minute ago, and that is that, you know, it's important that the people who are going to be playing a role in mentoring, guiding, holding hands, opening up access to markets and networks and contacts, exactly the sort of thing that people like Aaron and Scott do all the time with the businesses that they work with. That's critical, and so we do need to do a better job of ensuring that we've got the right talent base here in Australia to be able to play and fulfil that role. Because the reality is there's a lot of people who might read a textbook or read some content that helps them to understand what it means to play that role, but unless you've sort of been there, done that, copped a few bruises and a few knocks along a journey and can come back and survive and live to tell the tale, and importantly not just tell the tale but share that learning experience with others so as to help them avoid replicating the same mistakes that you might have made, then I think that's when the ecosystem is setting itself up for success. Aaron probably has much deeper insight from a on the ground level, I suspect.
Yeah, I'd like to hear that as well. And while you're mentioning that point, they've changed the rulings on bankruptcy. It's only 1 year that you now are bankrupt. So, you know, anyone out there with a great idea, just make sure you've got a good, friendly family that'll back you up for at least 1 year while you're down. So, Aaron, from that point of view, what are you seeing? Is it encouraging people to take a lot more risk? And the danger is that people are doing things for the wrong reason, picking up on these incentive packages, and it leaves a bitter taste in our mouth as an investor at the end of the day.
Yeah, so I think continuing that conversation down the other end of the funnel, so sort of startups that are pre-revenue, pre-market fit, product market fit, there is a lot of attention in that sector. So I think Telstra's done a great job with their Muri-D Accelerator program because it's completely at arm's length outside of Telstra and it's run by entrepreneurs. And I think part of our role in the ecosystem is actually educating the corporates about how they can get involved in the sector and making sure that these programs are actually done correctly with experienced entrepreneurs that have been and done it and can introduce people to networks and so on. I think we need a cultural change. I think the risk with a lot of these grants that are targeted towards entrepreneurs, so right now the Ignite Ideas Fund, the state government's running, you can get between $100,000 and $250,000 as a grant. No equity base, no repayment, a straight grant. There's a budding entrepreneurs program out of the Brisbane Lord Mayor's office, $5,000 grant for entrepreneurs. This is a little bit risky because now I'm getting inundated with startup founders that have ideas that we're never going to do anything with them, that have no skill set to do anything with them, suddenly chasing these grant applications to go and get this money. And they see raising money as a metric of success rather than actually motivated about building a business or having an impact in the economy. So I think we need to make sure that our culture, like the mindset of entrepreneurs entering startup land, understand how bloody hard it is for starters, but understand the educational piece that they need. It's not a lifestyle choice, and the risks that are involved in the sector as well, and building an ecosystem around that to support them as well.
Sounds quite dangerous. Yasser, if we're hearing those sorts of handouts for grants, and, you know, as you know, a grant is a handout. You don't owe anyone anything back. Sometimes you don't have to show any results for that at all. Where could we end up if this all goes south?
Again, you know, fulfilling the role of the glass half empty person. You know, where we could go is a really bad spot. And again, you know, some of the discussion that I've had with government and others is to be realistic about this point, and that is that, and I sort of think of it, Linda, as the current affair moment. I refer to it as the current affair moment, and let me explain quickly what I mean. So it's the point in time at which startups, innovation, entrepreneurship moves overnight from being the darling to some sort of devilish, demonish part of the economy that's only there to exploit and take money away from people. And I think there is a risk of that. I don't think it's a high risk, mind you, because I think a lot of us are doing everything possible to try and ensure that there are safeguards in place to minimise it, but none of us can eliminate this risk altogether. And all it's going to take, if I'm completely honest about this, all it's going to take is a few really, really bad examples of where businesses, or even, dare I say it, fly-by-night, you know, shonky people pop up with the opportunity to establish capital raisings through crowdfunding platforms or what have you, rip money away from hardworking people who admittedly probably got sold a bit of a puppy to start with because they were told that this business was going to be the next big thing and they were going to become instant millionaires, and shock horror, they don't. And it ends up being the lead story on a current affair. And that will turn the tide. That will turn things around from, I think, opportunity then into deep problems and risk. Hopefully we don't get there, as I say, but I think, you know, it's important that we recognise the reality of what we're dealing with here. This is a riskier part of the economy. People have to understand that. Everyone in this room gets that, clearly. But outside in the broader community, we need to make sure that that's well understood. And we also need to make sure, again, as Aaron says, that entrepreneurs are motivated. And Scott said this a little bit earlier as well, from an investor point of view, that people's motivations are in the right spot. If you're doing it for a tax outcome or a handout, or you're doing it because it's a lifestyle choice and you want to work part-time, go to work in jeans and T-shirts, then, you know, there's probably some deeper issues you need to contemplate.
Yeah, Scott, you've probably got some comments on that.
Yeah, look, I see, like we would have seen in the explosion in the resources sector, not to just keep pushing that, but I used to be in there. Every time we see a cycle in the economy where a new sector blows up, it attracts a lot of attention, it attracts a lot of government support, and it attracts a lot of money to that sector. And as we saw, we see, you know, a lot of expansion in that sector. Obviously, when that cycle cools off, obviously, when a lot of money comes to it, obviously does attract some of the cowboys. When that sector then retracts a little bit, it does clean out the cowboys, and we get a sort of more consistent, I suppose, industry moving forward. I sort of see the VC/PE sector in Australia in its infantile stages when compared to, you know, the States and Europe and some of the programs that they have over there. So I think we're at the start of that growth curve, or at least the start of a strong growth curve. And unfortunately, when that happens, there will be, you know, cowboys, and there will be things that go awry. Hopefully nothing blows the sector up in the short term. But in terms of quality of entrepreneurs, I can't echo, you know, what the other panelists have said further, in that one of the strongest sectors of the internal filter that we use at our stage is the actual founders of the company. They might have the best tech, they might have the best new widget. However, at the end of the day, I've got clients that I have to talk to, and I have to promise them a return. At the end of the day, I'm cutting that guy or girl across the table from me a check. So I have to make sure that they know what a P&L is, they know what a balance sheet is, they actually know their company, and they can answer questions, you know, off the cuff. We find, I don't know whether it's different to other people do it, but we put a very, very heavy emphasis on management. And I think if a lot more firms would take that view, we would filter out and not, I suppose, waste government grants and money would actually be attracted towards, you know, the right recipients, or the more deserving recipients.
So Scott,
Of course, so you're always backing the people as well as the business, but we put, I suppose, the people first.
Yeah. So if we all put on the glass half full for just a moment, adding onto that, so when you're looking at these business cases, can we not forget the dream? Can we not forget the inspiration? And can we sometimes just go, okay, the government is making me change my mindset. Yes, I have to look at it from business case and fiscal responsibility, etc. But where can I get that passion from, just to take that little bit of a risk?
Look, absolutely, and that's why we're in a high-risk investment scenario. Like, I think it's fantastic. We'd probably have 10 to 15 companies a week pitch at us, and maybe one every 4 or 5 weeks might actually get through. But the passion that you see in these people's eyes, and, you know, they all actually do think they're going to have the next billion-dollar company, and sometimes you have to crush people's dreams, or just bring it back to reality. But I think it's fantastic, the amount of activity that's coming out of this, because I think it is, you know, there's a buzz around, there's a talk around, everyone at least is now having the motivation, or at least the confidence, to step out of their comfort zone and start a new business, or, you know, decide to do the next big thing, or they have some, you know, great new widget. I think it's great, and we're only seeing our business grow and grow more, in the amount of companies approaching us more and more. So I actually think it's going to be a positive, but I think it goes back to what I was saying, is we're in the infantile stages of a boom here, I think. So we just got to make sure that's channeled correctly, and, you know, between Yasser and, you know, their I suppose, guidance of the industry and their interaction with government, that hopefully policy stays on track and the industry heads in the right direction.
Yep. Speaking of infancy, one of the incentives is $84 million towards STEM, which is science, technology, engineering and maths in the school system, and $13 million specifically for women. It actually has got a title on a media sheet that I've got here from one of the federal government departments, which says Making Science Sexy. And then, of course, the incentive there is that we have to give an extra $13 million to girls and women to try to make them sexy. Don't they think we're sexy? We're starting from infancy, so we have to encourage women into this sector. It's not a. It's not, no. I'll rephrase the question. So they're trying to do it at an infancy stage. They're trying to come in and target from a school point of view, and they're trying to bring a gender equation into this. I just think that let's just say, yeah, science is sexy. What are the problems that? So let's look at some positives if we get that right, rather than looking at the risks. I think we've covered that enough. Let's talk about some of the positives that we can get out of this.
So I think the education piece is fundamentally important, Linda, and I will avoid answering your specific question a minute ago. But it is really important, and it's important because, again, you know, the narrative that we have to be working to, if we are to make this momentum stick for the longer term, and it builds on, you know, Scott's point, I think. We want this to mature and for us to continue to evolve. We have to recognise that it's not all about capital, it's not all about the tax system, it's not all about creating enough momentum for new funds to be established. It's about the entire spectrum, and that goes right through to schools. And so it's great to hear that you know, we've got representatives starting to put energy and resources, the limited resources that we all know that schools have, into this area, because it's so important for our future. But I think the science piece in particular, science and engineering, clearly has been on the radar now here in Australia for quite some time. I think there's a way to go in terms of us ensuring that we move beyond just the rhetoric at a top line level, and we actually embed the right architecture into our system for the future that helps kids at all ages, and also importantly helps the entire system around, you know, kids as they're going through schools. That includes parents, that includes friends and family and extended family, etc. But if we recognise the value of those skills and put them on an equal footing with the value of having legal skills and accounting skills and corporate finance and all of those things that tend to be, you know, the centre of attention in the education system as people start to mature and go through to tertiary education, then I think we're setting ourselves up in the right way for the future.
Yeah, I think it's a very valid point that we are having those building blocks. You know, you've got to start a house with a foundation. You can't just put the roof on first. Doesn't work apparently. And so I think that's. I think having the Helensville High School principal here is a fantastic example of exactly what the government is trying to do and target. Get in early. And hopefully that then resolves the issue of being so cyclical as we've seen previously in resources, and the dangers that we've seen to the stock market and how that's fallen off so quickly. So my perception is that the federal government is trying to address that and just even out the market space a little bit better. Aaron, from your perspective, are we seeing any impact from even a high school perspective or university perspective as yet?
Absolutely. So River City Labs works very closely with a number of universities and a number of high schools now. So recently actually taking our mentor pool into high schools and doing mentoring as part of entrepreneurship programs. A big focus from the schools, like an incredible amount of interest out of the schools and universities, and most of it is actually student-led. Particularly at the universities, it tends to be student-led. I think bringing that conversation back earlier around STEM skills and entrepreneurship at a younger age is fantastic. I sit on 2 advisory boards at Bond, and we survey students coming out of the degrees, and they don't want to start businesses. They want to go and get a job in a top-tier consulting firm. And they actually think that that's a safer bet despite all the disruption that's happening in the market and the way the job market's moving. Because I think we're going to end up like the movie industry, right? It's going to be like Hollywood, where we contract to one company for a project and then move on and contract to their competitor for the next project. We're going to become much more transient in our careers. So I think we need these broad skills, and I think STEM is a critical part of that, and I think we need to start that conversation much earlier. I think the gap that's missing is the educate the educators piece. I think we need more programs for teachers and principals and everyone else to actually be aware of the sort of opportunities that are there and to connect them into the startup hubs to leverage the resources that already exist.
What about, as you referred to before, Yasser, and you've said it yourself as well, Aaron, some education programs by the government for the investor, especially when you're looking at crowdfunding, angel investors, those sorts of things? Yeah,
that's really important as well, Linda. It's important because if we lift the bar or if we lift the overall average quality, and it's not to say that our quality is below par at the moment, but clearly the better we are at making smart decisions, the better we will be in terms of our position going forward and our capacity to ensure that the momentum of the ecosystem, as it's often referred to, is sustainable. What we don't want to see is flash in the pan type stuff and crash and burn, year to year or between peaks and troughs. So we need to do what we can. I think education for the investor segment is really important. A good example of this is the changes that I mentioned a little bit earlier to the significant investor visa program that Andrew Robb worked on behalf of the government last year is a really good illustration of this point, because what we're seeing in that context now is we've got a plethora of applicants based offshore, generally wealthy individuals with capital to invest into a country like Australia who want to do that because they ultimately want permanent residency here in Australia, which is tremendous. But we're suddenly exposed now to an environment where we've got a ton of applicants who know very little about venture capital. But under the new SIV program, the government has said to them, you must invest. It's not optional. You must invest 10% of your $5 million as a minimum into venture capital. So it's a really interesting sort of dilemma, if you like. It's potentially a really good thing, but before we get to the great outcomes, we've got a journey around educating those offshore applicants. And the really interesting thing for us at the end of the day, and we spend some time in Asia, doing some education around this with migration agents and lawyers and even some of the applicants themselves over the past few months. When you actually sit down and explain to people offshore, and it'll be the same very much for people domestically, I think, as well, what venture investing is all about, the sort of dynamics you need to be taking into account. People get it. This isn't rocket science. In fact, there's a very good chance that if you're wealthy enough to be able to consider a $5 million visa program to migrate to Australia, there's probably a good chance you've run a business and you've made money, right? So the minute you start explaining, well, this is what investing is all about, and this is what you're looking for. You're looking for good businesses with, opportunities to scale up. That the heads start nodding straight away. Yeah, I get that because that's what I've done. So it's got different monikers and different labels attached to it, but the same investment thesis applies, particularly if you've got that experience set behind you.
It's never been a more exciting time to be an investor in Australia. Final comment. I would love to talk to these three gentlemen for hours, but I know we have others to listen to. So final comment, if we start with Scott and move down the table.
In terms of final comment, just to echo a quick bit on the education. I think education's key. Some of the things I think the unintended consequences of those SIVs is that if you do have a wealthy individual who can afford to pay $5 million to migrate to another country, legislating 10% of that to go into VC, is there real agenda investment returns, or is there real agenda $5 million to come to another country? So if they've got that much money to pay, then losing 10% of that and potentially blowing up, I don't think it's the real agenda of for them to drive. So what I think that's unintended consequences of that is you see a lot of fly-by-night shops opening up saying, we're going to manage people's VC money for SIV. So that's just a bit of the unintended consequence of, I understand what they're trying to do, push money away from resi property into VC, but that sometimes everyone tries to play that loophole. For me, it's just an exciting time, especially our firm. We've only been going 2 years. We're just excited to do more and more investments and just to see more and more quality people. So by all means, our doors are always open, and we're happy to have conversations. And I'm always, fairly upfront and honest, given the fact that I've been on the other side of the table before. So it sometimes can be daunting, but at the end of the day, we're just making an investment decision like you are as well. So to all the, I suppose, presenters today, best of luck, and hopefully I'd like to see everyone's businesses get up and running.
Thank you. Yasser?
Thanks, Linda. I just have probably 2 points. One is it's fantastic to see a momentum building and continuing to build over many years here in this part of the country, and credit to Rick and the team around the Founders Forum group, because it's tremendous to see all of you putting the energy and dedication into coming together and exploring these opportunities in the right way. I think that's so important because this is the ecosystem. You are a part of the ecosystem, and so the decisions that you all make on a day-to-day basis about whether or not you back a particular business and what you're looking for in order to make that decision forms part of the overall integrity of what we're all doing. So congratulations to you for that. The second point I'll make is probably an obvious one, and that is that the government does have a big focus on this part of the economy, and because you are all a living, breathing part of it, you should ensure that you share your stories, you share your experience, you share your observations with members of Parliament. I know Glenn Tozer's here from the Gold Coast as well, but make sure that you share those experiences around, because at the end of the day, all the way down in Canberra, they need to understand what's happening in the market, and you guys are the market, you're a part of it. So if you've got some observations about what would help improve the landscape, what's not working, if after these programs are implemented you have some feedback on whether or not they're delivering the right outcomes or not, please share those views. And if you need to call me up and tell me about it, I'm more than happy to get those phone calls as well. But it's so important that we get this right for all of our prosperity opportunities into the future.
Thank you, Yasser. And Aaron?
Yeah, I think I have 2 points as well. So drawing on the last comment, I think that was great. The government is listening. I think this is a fantastic time to launch a business, but you don't have to just launch an idea. Everyone in this room has networks, connections, expertise in some field. Actually support a startup. So everyone thinks, the mandate is to actually come up with an idea, build a new business, or simply to invest. There's so many other ways to actually play in the ecosystem and get involved. And I encourage you all to actually participate and support those businesses that are launching. The second comment I wanted to make was it's also our role. So the comment before about, was it a current affair moment? Yeah, we have the Courier Mail front page as our moment. But it's going to happen, right? These government policies, they're new. They're experimenting. If you spend some time with Wyatt Roy or Leanne Enoch around their policy development, they totally accept that a lot of this is unknown. So our role is when it does fail, when it does end up on the front page of the news or whatever, we have to support the fact that they tried. We actually have to be positive and encouraging them to actually take these risks, because they will get it wrong sometimes, and that's actually okay. But I think it's really exciting. I think it's a fantastic time to be in the sector.
It's never been a more exciting time to support an entrepreneur. So please, with me, join in thanking Scott, Yasser and Aaron for our presentation this morning.